Today, we're going to talk through housing market data in regards to the 10 most populous counties in the United States. Now, I want to explain I have removed a few California counties just because half the list would be California due to them having large counties. The other portion is that I'm eyeing a few of these counties for investment properties, hence why they're on the list. Not every single one of them. Cook, Illinois, Los Angeles, California, zero interest. But basically what I'm doing is breaking down the number of listings per month. And then on top of that, I'm looking at median home prices, and then we'll take a look at the housing market seasonality. So let's get into it. I'm going to include a card on this video for the realtor.com research/data section that I get this information from. This is pulled from the county data. I like to look at the county data versus the metro data or any of the other sheets. And I do this by the historical, so it's monthly. And the reason that I do that is because I want to see the longer term trends, not just the immediate trends, because there can be outliers and some volatility there. Now, I want you to notice if you have any particular areas, you can check out the numbers for them. Again, this is average active listings by month, by county, from July 2017 through November of 2021. You'll notice a disturbingly low amount of active listings still as of right now. I want to cheat and go jump ahead a little bit in regards to home sales and prices seasonal from 1999 to 2018. What do you notice? What stands out immediately? The number of home sales. Notice that June, July, and August, that's when the most home sales happen in the middle of summer. The lows tend to happen January, February range. Okay, so if you're looking for a dip in price, that's usually January or February. However, because 2020 and 2021 have been so weird, I personally am going to be waiting. I think there's still going to be tons of attractive options, more in that September, October range. That's what I'm personally looking for. Again, you could wait till January. There's going to be fewer listings or potentially fewer home sales going on at that time. So you're going to have more opportunity for those price dips. You'll notice that with the median home price, those seem to dip the lowest in those January and February timeframes. Going back to the data, I have my eyes on places like Maricopa County, Arizona, half. Right now it's at 50%. My thought process is that by middle to end of next year, there's going to be some type of normalcy. Regardless of all these supply chain issues, regardless of the stock market and the crypto and everything at all-time highs and the inflation and stuff, I think people are getting desperate to get back to normal. I think one of the best ways to reset is a new home. Prices have only appreciated the last couple of months, so it makes it more attractive to sell the home. That also ties into that seasonality of more listings start coming March, April, some of that time frame. So maybe even a little bit earlier in the year or earlier in the cycle, maybe August or September, I'd be looking for, potentially investment properties and things like that. But you can see here that New York, for both Brooklyn, which is Kings, New York, and then you got Queens, New York, are the outliers. Okay, ton more listings. They're 50% above the average. All right, now scrolling over to look at median list price. We're going to take a look at, again, Maricopa and just kind of look at the consistency. So 23%, according to this, as the median list currently is 507,000. Look back at 407,000 is the average. So this is over the last 4 years. Looking at the trends here again, you'll notice that there's this dip at the end of the year. This all leads to the same hypothesis. Normally it's going to be January and February, but right now you have crazy low inventory. I don't think the deals are here yet. At least that's my projection. I could be wrong, but that's what I'm looking for. Now, to present alternative data that could prove me totally wrong, here's an article from Fortune. Now, this first one is Zillow's growth forecast. Let's be honest. Go back and watch my videos on the Zillow trade. Worked out incredible. It was so awesome. It was one of the best trades of the year. But Zillow overextended because of their algorithm. Zillow's projecting 13.6%. Now, across 7 different projections that Fortune took into account, 6.6% is what they landed on. Zillow is showing 13.6%. I have to admit, Zillow's projections don't really have my buy-in. I don't really trust them. They overextended in regards to that. Again, go watch my Zillow videos if you have any questions about my predictions there and basically what happened. They got crushed. Redfin, which has been more conservative, more accurate. I wouldn't necessarily say that I agree with this still, because I think there's so many factors that are pushing in the opposite direction that, it's like, which one's going to be the straw that breaks the camel's back? Redfin forecast is at 3%. I question this because I think everything is so overly optimistic that I'm skeptical. I can't help it. You got the stock markets pulled back some, but not very much, in all things considered. Then on top of that, you've still got the supply chain crisis, which hasn't gotten any better as the holidays have gotten here. Then on top of that, you've got things like crypto and speculative investing at all-time highs. This feels bubblish, okay? So Redfin's, while I respect it more and it's a much more reasonable projection, I still don't fully buy that. The Mortgage Bankers Association forecast is negative 2.5%. This goes back to interest rates, in my opinion, and it's the fact that the Fed is starting to taper, and they've already talked about they're going to start to taper. JPow, you're so confusing when you talk, and it's all the disguise like, oh, transitory, I wasn't wrong. You were freaking wrong, bro. Like, you were way wrong. Like, you were way, way wrong. And here's the thing. I don't think inflation is going to pull back. So I think that they're going to have to raise rates a lot more and a lot faster than they thought. And because of this, that's going to depreciate home prices, or at least stop that growth. So at least for me, I think this is going to play a factor too, that when I'm looking ahead more 9 to 10 months from now. That's really my time horizon of when I want to get involved. Even though I'm chomping at the bit to add on the real estate side, I have to admit, as localized as it is, these overarching economic factors and details are important and can't be dismissed. I want to ask you your opinion wholeheartedly. I'm genuinely down to discuss with anyone who wants to their opinion as to why this housing market may continue or why it may not. I'm somewhere in the vicinity of, I think it deserves a crash, and I think there's a lot of factors that could make it crash. But at the same time, I'm not into fear mongering. I'm into the truth is usually somewhere in the middle. And the fact of the matter is that I, in talking to people, have found that most people that I know, different states, different financial situations, everything from high net worth, and we're talking tens of millions, to, your normal average person who's probably got a net worth of $50,000 to $100,000 if you factor in all the debts. It's just one of those things where I think that markets have reached kind of an inflection point of affordability. And when that starts to get driven down, that demand dies off. And again, who's going to be able to afford and move into these homes? If it's not allowing for any first-time buyers, it's pretty much going to get stuck. And here's the thing, again, local economies matter. Places like California, if they continue to lock down and do some of those things, they are seeing a lot of people migrating out. That being said, it depends on where economies are. If you have a lot of jobs in an area, that can continue to be the case, and it can be fine because you can still attract workers, you can still attract people to the area. Again, if you don't have stores broken into and a bunch of craziness going on. I really do want to hear your opinion, but those are my thoughts. That's when I'm going to be looking. I'll look in March and April and May to kind of see what listings look like, see if it actually plays out. But if that's the case, it's really that downside, that backside of more like October, November, December becomes much, much more attractive because, again, if you look at the seasonality, January, February is really that time to buy, especially if you find a property in a place you want and in a place that makes sense. So again, look at the trend data. I'll be sharing that sheet link in the description below. So be sure to check that out. And again, for your own research purposes, let me know what you think in the comments. Thanks for stopping by. Hope to see you again real soon. Bye.